Welcome back, D-traders. Market participants will be able to adjust their trading strategies to the Fed's verdict tonight. The markets are anticipating the decision on the official funds rate and any signs of a dovish reversal. Now, let's discuss fundamentals on Wall Street for today and the near future. Despite the optimistic pre-market on Tuesday, the New York session ended with losses. Fragile optimism accumulated in October was ruined by fresh JOLT job openings, which reinforced the likelihood that the Federal Reserve could be poised to continue aggressive rate hikes. The benchmark indexes closed the volatile session on Tuesday in the red. The Dow Jones shed 0.29%, the Nasdaq tumbled by 0.89%, and the S&P went down 0.41% to close at 3,856 points. The major stock indexes traded quietly in the pre-market. The Fed's policy update and the following speech by Jerome Powell are sure to give a fresh impetus to the stock market. Depending on the content, we could see the rally either on Wall Street or in the US dollar. The S&P is expected to trade in the intraday corridor between 3,770 and 4,020 points. The Fed's policy announcement is certainly taking the center stage tonight. Recent macroeconomic indicators, which serve as a criteria for the Fed's policy moves, have not provided clear-cut signals. On a Tuesday, stocks fell because the JOLT's job openings report looked an unexpected rise in vacancies to 10.7 million in September, though economists had predicted a contraction to 9.9 million. Such data could have disappointed the central bank because it intends to reduce demand for labor force in order to push inflation down. Yesterday, the market neglected another report from the United States. The ISM manufacturing PMI showed that factory activity in the United States grew in October at the slowest pace in the last 2.5 years because high interest rates decreased demand for goods and inflationary pressure on manufacturers eased. The Fed gives priority to steady and robust hiring. The stocks of energy companies traded in the green yesterday. Chinese companies publicly traded in the United States also gained ground. The companies with a mega capitalization have been facing a challenge since the Fed began its monetary tightening. Amazon and Apple shares dropped by 5.52% and 1.75% respectively. Interestingly, Amazon lost the status of the company with a market capitalization worth $1 trillion. The market cap of the high-tech giant plummeted to the lowest level since 2020. For the time being, the trillion-dollar club includes only 4 companies: Apple, Microsoft, Alphabet, and Aramco. Stocks of Uber and Pfizer rose on strong quarterly earnings by 11.97% and 3.14% respectively. Today, the largest vessel operator, Maersk, is due to present its quarterly report. Its gross profit expanded to $10.86 billion, more than the expected $9.78 billion. The revenue surged by 37% to $22.77 billion, though the number of containers loaded on vessels contracted by 7.6% from a year ago. Some surveys and fresh macroeconomic data revealed that inflationary pressure is likely to ebb away soon. Some Congress members supervising the Federal Reserve also warned against 2 aggressive rate hikes. This aroused speculations about the dovish reversal in the Fed's rhetoric in December, but the data on the US vacancies released on Tuesday ruined the hope. Analysts suppose that Powell will come up with a cautious remarks and will hardly give a precise signal to markets. The US dollar has lost its footing ahead of the Fed's decision. Its index shed 0.29% intraday. The CAD for today is seen between 110.10 and 112.50. The signs of the less hawkish Fed could trigger a considerable retracement of the US dollar. At the same time, if the Fed retains its extreme hawkishness, the US dollar will rebound to previous highs. With a rate hike of 75 basis points, the official funds rate will stand at the levels of 3.75% and 4%. It's the highest level since early 2008. The pace of the Fed's rate hikes this year has been the fastest since the 1980s. With today's rate hike, the Fed has increased interest rates by 375 basis points. In anticipation of the decision, Fed funds futures suggest a 50-50 chance of the same sharp rate hike in December or a slower rate hike of 50 basis points. The US private sector unexpectedly created 239,000 jobs in October, the largest growth in the last 3 months. It's beyond market expectations for 195,000 jobs. Manufacturers of goods who are sensitive to high interest rates employ fewer people. Americans changing their jobs earn lower wages. There are signs that demand for the labor force is waning, albeit in some sectors. The Canadian dollar has gained 0.18%, but its further trajectory will depend on the US Fed. The USD CAD pair is likely to trade in the intraday corridor between 1.3540 and 1.3670. Any dovish notes will help the loonie to assert strength against the US dollar. The speech by Governor Tiff McClellan on Tuesday left room for maneuvers. The governor does not exclude another sharp rate hike as a countermeasure against the soaring inflation. The crypto market is also in the wait-and-see mood. Digital assets are trading sluggishly, intraday mainly in the red. Amid pressure on risky assets, Bitcoin dipped 0.4%. Ethereum is facing sell-offs. Solana, Ripple and Litecoin are trading mixed in a wide range. The crypto market will gain impetus tonight after the Fed's meeting. Anyway, Bitcoin has a chance to escape from the narrow range between 20,200 and 20,600 and rest wide range borders between 19,100 and $21,500. InstaForex analysts are keeping close tabs on the financial markets and provide you with the accurate analysis and forecast. Trade with the profits and see you tomorrow.